Well, welcome to the webinar, everybody. My name is Clay Malcolm here at Advanta IRA. And today we're going to be talking about cryptocurrency as an investment strategy for your IRA or other tax-advantaged account. I'm delighted to have a couple experts from Robert Ventures with me today, Bill Gita and Joe Robert. And guys, thanks a lot for joining me. Thanks for taking some time.
Thank you very much for having us on and everybody else joining us today.
Yeah, pleasure to be here. Thank you.
Yeah. Awesome. Well, and so for those of you who are tuning in at home, I'm going to go through a little bit of self-directed IRAs and the way that they can invest in cryptocurrency in that asset class. It is a little bit more varied than you might imagine. I'll take up as little time as I can and hopefully be as succinct as I can. And then around about 10, 15 minutes into the presentation, I'm going to turn it over to Bill and Joe for the bulk of the presentation. And they're going to be, I've gotten a chance to preview the material, and it's really a great way to kind of get yourself acclimated to the environment. And I really appreciate you guys putting together that broad brush and putting in the expertise that you did. So I think everybody will get a lot of that, and then we'll have Q&A at the end. So from a housekeeping standpoint, please feel free to go ahead and type your questions into the questions box whenever you have them. We'll take them at the end. The session is being recorded, so if you want to come back and reference it, you'll be receiving an email that has a link to the recording so that you can go back and take a look at whatever you'd like at your leisure. So I think that's it for the housekeeping, so I'm going to go ahead and kick it off here. So all the information in the webinar today is going to be for your education purposes only. At Advanta IRA, we don't give tax, legal, or investment advice. We don't advocate any particular investment strategy or any particular investment entity or vendor. And we certainly encourage you to, talk to and utilize your professional team when you're analyzing any investment that you might be making with your tax-advantaged account or for your personal investments as well. So that could be your CPA, your attorney, your family, whoever it is that is your advisory system. Please do use them in terms of the due diligence. One thing I often say about this disclaimer is that often disclaimers are a little bit of a throwaway, but in this case, it really does talk about the position of your self-directed IRA provider, Advanta in this case. We're a very neutral part of the equation. Our job is to listen to what you want to invest your IRA in and to document it properly so that you get to keep the tax benefits that are associated with the account type. But that's really the limitation of our role. We're happy to be educators about account types and the rules that are associated with them and that kind of thing. But the investment force, the motive force behind choosing an investment, vetting it, doing the due diligence, all those kinds of things, it's up to the account holder in a self-directed IRA, which is one of the really powerful things about this investment strategy. And a little bit about Advanta. So we've been around for about 20 years. We have about $2 billion in assets that are under our administration. That puts us as kind of a medium-sized company in the space. We're big enough to have seen everything and small enough that you still get to talk to people and have our phone numbers and emails so that you know where to go for information. Advanta is built as a customer service organization. Each account holder gets a two-person team. Myself is kind of an education and onboarding person, and then a back office account manager that helps with kind of the nuts and bolts and the investment paperwork and problems if you have any with the online portal, et cetera, et cetera. So, but you always know where to go. You have our emails, you have our phone numbers, and we're happy to help all the way through the process of your investment and your account. I'll just own that I've been in this space for about 11 years as a professional and 10 years as a self-directed IRA and HSA investor myself. And I've invested in all kinds of things, real estate, cryptocurrency, and more. And so I have a special kind of place in my heart and my brain for what we go through in terms of choosing assets to invest our money in, thinking about the returns, thinking about the way that they fit into the rest of our financial picture. So I'm one of us in terms of being self-directed IRA investors, and I'm always happy to talk to people about how that works and the things that are involved in it. So at its core, again, what we're talking about today is basically combining the tax advantages of particular account types with the investment returns that you might be able to make in alternative asset classes. Today, we're going to be talking specifically and drilling down into cryptocurrency as an asset class. but there are others available as well. But the thing I want to mention about the account types is that they stay the same. So the contribution rules, the distribution rules, the tax advantages, all those things are exactly the same as you're familiar with. The thing that we're usually talking about when we talk about self-directed IRAs at Advanta is that instead of that money investing in a publicly traded security, like a stock or a mutual fund or something like that, it'll invest in something else. It could be cryptocurrency, real estate, precious metals, etc. So the mechanism, the tax mechanism, the tax tool stays the same. You're just putting that tax tool to work in combination with the returns that you might be getting from an alternative asset. And again, just as a broad brush here, there's all kinds of things that you can invest in that the IRS allows. So if you have a particular expertise or your team has an expertise in an asset class, this is a way that you can utilize that expertise and exploit it and combine it with the tax advantages so that you can create wealth for your retirement. So real estate, private equity, private lending, so any kind of debt instrument usually is available. Precious metals, I mentioned, gold, silver, platinum, and palladium. Cryptocurrency is kind of a newer asset on the scene, but certainly a very popular one and one that people have a lot of interest in. And on the real estate part, I put a few kind of variations in there because there's so many. Sometimes I say an asset class like real estate or cryptocurrency, and people think it's one thing, and it is absolutely not. It's just kind of the beginning or the bigger area. So one of the things that we're going to drill down into today is what are the options in terms of investing in cryptocurrency in that space. So again, I'm glad to have Bill and Joe on because they're going to be able to help clarify that for us, give us a little bit of a map for that. As I was mentioning, the IRS and cryptocurrency and other alternatives, the IRS is basically they're offering us a deal with this money that's in your IRA or your HSA or your solo 401k. And basically what it says is we'll give you some tax advantages associated with a certain amount of money that will let you contribute. You basically have to do two things. You have to have a qualified custodian, at least for an IRA. Solo 401ks, you have a trustee, a little bit different. But you have to have that overriding entity, and you have to follow the rules. A lot of those rules are basically based around no self-dealing and things like that. In cryptocurrency, it tends to come into play a little bit less. Now, one of the things that's interesting about cryptocurrency and IRAs is that some of the things that make cryptocurrency so cool, its adaptability, or at least its accessibility and its speed and things like that, actually make the IRA custodians work a little bit more difficult, because anything that your IRA owns, technically speaking, we're supposed to have the custody of that. That's why it gets to have the special tax treatment, right? That's part of the deal. So IRA custodians and cryptocurrency investment providers and exchanges and platforms and things like that, we're still working out all of the ways that we can interact with one another so each of those entities can do their job and you can have the investment and the tax advantages. So do remember that this is an ecosystem that is still developing. Nothing is completely set in stone yet. And I'll talk a little bit about here the ways that you can invest in cryptocurrency, generally speaking, in the Advanta IRA kind of world. So there's a couple different ways. One is you can use your IRA to invest directly into the exchange, but you also can use an LLC, right? So it's very common for somebody to open an IRA, have an LLC as a subset, and then the LLC is actually the entity that goes out and creates an account at an exchange or exchanges, and that's the way that the operation occurs. Because the IRA owns the LLC, then all of those proceeds and the investment returns are considered to be within the IRA. So you do get the tax advantages. So there's a lot of agility in this particular model. It does take a little bit longer to set up, but there's good amount of control and agility here, and I'm happy to discuss that in great length with you at any point. Do remember that cryptocurrency's availability is usually tied to the exchange or the platform that you're on, because they will decide what they handle as well. Second way is a more direct way. So we do have and are working on direct relationships with cryptocurrency exchanges. So if you wanted to get into particular cryptocurrencies and do it in a very direct way without the LLC, We are working on more and more opportunities for that. Again, relationships between exchanges and IRA custodians, they take a little while. So everybody needs to understand what the parameters are and that kind of thing. We do have a few exchanges that are up and running, ready to invest. So there is an opportunity to do this direct method already. And the last one, and this is becoming more and more prevalent, and I've certainly seen much more press about this, is that there are cryptocurrency funds out there that are doing the heavy lifting when it comes to deploying the capital. So, in a lot of cases, what happens is the IRA is actually investing in a fund or private entity of some sort that is that fund. And then the fund is going out and investing in the cryptocurrency or interacting in that space. We often record this as a private placement, not necessarily a direct cryptocurrency acquisition, but a private placement. Again, all of it is still occurring under the auspices of the IRA, so it's all still gets the tax advantages, but it is a different way of investing in cryptocurrency, and it's available to IRAs and HSAs and all the account types that I showed earlier. And one of the reasons why we do education about cryptocurrency is, again, it's an emerging asset class, and there are all kinds of things to think about as it kind of matures as an asset class. Certainly technology is a big part of it, and storage has often been a very critical component of how your IRA or even a person invests in cryptocurrency. So there are all kinds of things to think about there from a due diligence perspective. There's what's the price that you're paying for the acquisition, what's the price you're paying for the storage, how much agility does that have, what kind of speed, how fast can you trade if that's what you're going to be doing if you're not in a buy and hold scenario. And then there's costs for each of these providers. So doing that kind of cost analysis and ROI is an important consideration as well. So understanding that there are some moving parts here, and all of them are good places to invest some time and energy to make sure you're comfortable with the fees and the speed and the mechanism that you're investing in. And I'm going to wrap it up here after this slide, but I just want to remind everybody that taking your IRA or old 401k money at say at an employer where you no longer work and putting it into a self-directed IRA to invest in alternatives, it is not terribly complex, and it doesn't take a ton of time, right? So I get a completed application. Usually I can have the account open in one business day. We start working on a transfer or rollover from that other tax advantaged account into your new Advanta IRA. That often takes a week or a few weeks. And then at that time, you can also be thinking about what your investment strategy is. So once the transfer or rolled over money gets to us, you can also make contributions, by the way, so some combination of those. Once that gets to us, we can often be ready to disperse that money for the investment, the next day or right after that, very soon after that event. So you can be invested in alternatives relatively quickly. It can be as fast as a week. Usually, more likely it's a couple of weeks, but it's certainly not a couple of months or a year or any of that kind of thing. I'm happy to run down the details for how that all works and give you more detail about what kinds of things that you will be involved in when you're making that shift over. And so any questions at all, absolutely happy to guide you through the process. So that's a really brief kind of shot at what's going on in terms of self-directed IRAs and how they invest in cryptocurrency. I realize it was very fast, but again, I'm here as an ongoing resource. I'm going to try to pass the baton over to Joe Robert, one of our two experts from Robert Ventures. So it looks like, Joe, you've got control of the screen there, yes?
Yes, it looks like I think we're ready to get started here.
Okay, right. So without further ado, everybody, Joe, Robert, and Bill Gita from Robert Ventures. And gentlemen, thanks so much for coming today, and I'll hand it over to you.
Clay, thank you for that awesome intro. And everyone, again, thank you for joining us today. We're going to go into how to invest here in the crypto and digital economy, and obviously utilizing your IRA accounts in a tax-free fashion. Some disclaimer that we have just to run through quickly. Presentations are intended for educational purposes only and do not replace independent professional judgment and may not actually reflect today's facts. Statements of facts and opinions expressed are those of the presenters individually. Unless expressly stated to the contrary, they are not the opinion or position of the trust custodian, Robert Ventures, or its employees or contractors. The trust custodian, Robert Ventures, and the presenters do not endorse or approve and assume no liability for the content, accuracy, or completeness of the information presented. Attendees should note that this session will be audio and video recorded and may be published in various media, including print, audio, and video formats without further notice. Again, in no way is trust custodian promoting presenters' companies, or presenters' companies' offerings. As Clay mentioned, as we get to the end, we'll handle any questions you may have. Please save them, and we'll take care of that. Thank you. So, a little bit of background about myself. I've been a investor. I grew up in the Philadelphia area and have been investing for over 20 years now. Most of that time, I've been investing in real estate and has comprised of over 200 properties and 165 million in mortgages. I've managed a distressed mortgage fund and led multiple partnerships. In about 2014, I made a move down to Puerto Rico for business. And at that point, I had the opportunity to meet other people in the crypto and tech scene that had moved there also for, obviously, the tax climate and opportunity it had for businesses. And when I met people in this space, coming from the real estate side, it just kind of gave me new energy to life, right? I mean, you hang out with so many young, talented developers from across the whole world. Like, I've never been exposed to so many different cultures and people across the world as I have since I joined this space. So it got me very excited, and I started investing with my own capital. And so for the last 4.5 years, we have been managing a portfolio of mostly liquid tokens around the infrastructure projects. And we've also built out relationships in the space by attending a lot of different conferences. And we've made investments into multiple notable venture blockchain funds that give us exposure to areas that we don't specifically cover. As this space is becoming broader, it's hard to know everything that's happening, right? So it's very important, as we kind of dive into some of the different sectors later, of picking an area that maybe you want to build expertise around and getting, diving in and spending all your time there. And that's probably how you're going to become a better investor. Also, along the way, we've made angel investments into projects that we found and met the founders along the way. And last, I would like to say, for the last 10 years, I've been utilizing my IRA accounts to invest in all these different assets. And today, I'm mostly invested into the crypto and blockchain assets. And I'm very excited. We're able to do this presentation. We've been investing, like I said, for over 4+ years, and we use our IRA accounts. My co-host here, Bill Gatta, is head of strategy, and he's going to give us info about him.
Thanks, Joe, and thanks, Clay. Glad to be here. This is going to be fun today. So real quick, a little bit about myself. Been an investor in cryptocurrency since 2015. So I bought my first Bitcoin in 2015. Like everybody else, I wish I did it earlier, but it's been a wild ride since then, and we've learned so much about the industry, and it's so changed over the past few years. So it's just a really exciting industry to be involved in. So over the past 4 years, I've been research analyst with Robert Ventures. In that time frame, I've really developed relationships with both LPs and the developer community, which is really, really important. We'll get into that afterwards. Again, spent some time with some of the universities and colleges in the Connecticut area. And really my passion here too is, I know Clay mentioned it earlier, but the solo 401k, the HSA, and the Roth IRA are great investment tools to be able to leverage cryptocurrency. So I'm passionate about this industry, and I'm also passionate about building a really rock solid portfolio inside of those tax advantaged vehicles. So this is a perfect opportunity to merge both worlds, and I'm happy to be here. Okay, so I'll start things off, Joe. Little background, right? Like, where are we right now? What is going on? Well, it's no surprise, everybody understands that inflation is just about 8% right now, and that's due to failed monetary policy across the globe, right? This isn't just a US problem. Globalization is at an all-time high, so communication between countries, between companies, between nations is just interconnected like never before. What happens in the US impacts Africa. What happens in Africa impacts South America. So we are so interconnected right now like never before. And then, of course, we are more digital now than ever before, right? So just the increases in technology, both from cell phone usage and all that kind of stuff, we are so connected 24/7 and now at a global level. So where are we? We're having some financial issues worldwide right now. Inflation is running rampant, and people are looking for answers about what's going to happen next.
And we all come together and participate on these video platforms. Our team, we have multiple people on our team that are globally. So, these software services allow us all to come together.
Yeah, it's not all bad stuff. So you may have heard about crypto and blockchain. Let's talk about why we believe that this is the future. So very notably right now, we're seeing a conflict in Europe between Russia and the Ukraine, right? So there's a terrible conflict happening right now. There is some interesting things that are happening, and it happens to do with Bitcoin most specifically and the idea of a non-confiscatable asset, right? So when you've got your currency collapsing 90%, like in Russia, you've got the euro having problems, you've got people in the Ukraine fleeing. What do you do with your capital, right? Banks aren't just going to remain open in the Ukraine. People are literally losing their money. This is unfortunately a really, really strong use case for Bitcoin, right? So when you're able to control the underlying asset class, you own it privately, there's no third-party intermediary that has access to that wealth, you're able to be in complete control. And we've seen case after case of people fleeing the Ukraine with their wealth still in hand. We saw that happen in Germany right before World War II, where people lost generational wealth because of new regimes. Now, another interesting part of blockchain technology is this idea of peer-to-peer permissionless communication and transfers of value. So DeFi or open finance is really centered on blockchain technology. And what this is allowing people to do is connect from all different walks of life and participate in a global, decentralized financial institution. So you're able to borrow, lend, and participate in basic financial services that were never yet before available to many different countries or individuals. So if you got a cell phone, you've got a wallet, you're able to connect onto a DeFi protocol, bang, there's no more red tape, there's no more intermediaries, there's no more banks telling you no. Another very interesting idea here is digital land records. So Joe has a background in real estate, so he can speak to this as well. But what happens sometimes is in countries in South America where there's regime change often, we see people's land and their records simply get erased, right? So generations of farmland, a new regime comes along, they say, oh wait, we're just going to restart this. And there's no way to go back and look at records and understand the deeds that were associated with that. And with blockchain technology, you're able to upload all of this critical information to a decentralized blockchain infrastructure layer where you can't just simply erase the history and it's permanently there. So we'll go into more detail about that technology specifically, but these are some really interesting reasons why we believe crypto and blockchain will be the future. So let's talk a little bit more about in detail what crypto and blockchain is. So very simply, blockchain is a infrastructure layer of software on which applications are built upon. In general, the technology is decentralized and leverages multiple points of nodes or computers that run the software so that there's no single point of failure. So Facebook, for example, quick example would be they've got a global headquarters, they've got a centralized entity that controls their servers, right? Well, we've seen Facebook go down in the past. You don't have that issue with purely decentralized blockchains like Bitcoin. Cryptocurrencies are another aspect of the blockchain technology. So you can think of tokens or these cryptocurrencies as a mechanism for revenue share, right? So if the Ethereum network is a great example of this. The Ethereum network is a smart contract platform, and essentially ownership of the Ether token gives you access and upside potential to all of the activity on top of that blockchain. So you're also able to participate in different projects, and you can think of it as gas that you need to use on a car, right? So in order to participate in that blockchain's activities, you need to own the underlying currency. Last, we come to Bitcoin, right? So this is kind of in a league of its own. It is effectively digital gold right now. It is a store of value. That is the narrative that is most popular currently. It's a finite supply. There's only ever going to be 21 million, and it becomes harder and harder to mine or generate year after year. So we'll talk a little bit more in detail, but that's the 101 here on crypto and blockchain. So as we mentioned before, I've been involved since 2015. Joe, we've been doing this for 4+ years now. What's changed and why now? Why are we want to jump into this again? What's the changes that are going to make this go mainstream?
Well, as everyone would say, we're still early. Even though people might think they're late, you're still early, right? We're still in the early stages of all this as these networks are being built out. But over the years, we definitely heard a lot of noise around institutions coming, a lot of capital coming, which it is true. It just wasn't the right timing yet, right? For the very, very large money to come into play, they need clear regulatory framework around what they're investing in, how they could custody it, how to be taxed. So Biden recently even put out a executive order, basically for all these different divisions, with the IRS, SEC, CFTC to come together and put this framework in place so that we can move forward, in this sector. So this is a very great sign because this is basically saying the government is supporting what is happening here, and they want to see it succeed here in the U.S. Also, going back 4 years, a lot of these projects were just in the start of their development, and now we have a lot of users coming to these different networks and creating this robustness. They were just white papers before, and now we have users. We have thousands of applications being built, and so it's like night and day from the last 4 years of where we have gone, and then also looking out in the next 3 to 5 years. With this regulation framework being put in place, we believe that there's another big wall of money that's going to come into the play here. So this is a report out just to give you an idea of how fast this space is growing. In this comparing the total crypto users to the global internet users, right? On basically a time scale. So as you can see in the left middle, where we are here, that we're actually outpacing the internet users today with crypto users, right? So we're growing at an exponential or a faster pace. The ability for this industry out over the next decade to provide this type of growth gives the opportunity for investors to participate, whether they want to participate in a equity fund or they want to invest in tokens themselves, or in the news, in the press, last couple of years, a lot of yield providers are out in the market where you could earn a fixed rate return that's stable, and that's able to occur because they have growth in the sector, right? So right now, there's many different use cases when it comes to blockchain technology, whether permissioned or permissionless. But for what's happening in the market right now, we're going to focus on these 4 different areas, and Bill's going to break them down.
Yep. So there's 4 main areas that I'm particularly interested in. We believe are going to have, most relevance in the years looking forward. So open finance or DeFi, which we talked about a little bit earlier, the ability for peer-to-peer connections with no red tape, no banks involved. Store of value, the blockchain, Bitcoin story here is pretty stable. We've seen this, the blockchain of the Bitcoin network run for 10+ years now. And of course, stable coins and privacy coins, which we'll go into. The Metaverse and NFTs, a wild new area, which we think is going to have some really interesting benefits moving forward. And then, of course, my favorite, the blockchain infrastructure layer, on which all applications, decentralized applications, and projects are built upon. So we'll go into this in more detail now. So there's 3 real areas for store of value, right? So when you hear about a stable coin is effectively a digital currency that is pegged 1-for-1 to the US dollar. The best example of this right now is USDC, which is owned and operated by a company called Circle, which actually just completed a $400 million funding round from BlackRock, which is obviously the world's most sophisticated financial entity in many respects. So that gives you an idea of where they're thinking and where their forward thinking is. Privacy coins are very interesting as well. So privacy coins block the sender's information and the receiver's information. Now, you may kind of think, well, this is probably only for nefarious activities. The reality is there's huge use cases for this technology in the developed world and, of course, globally. Privacy is a central element to freedom, and we believe that countries are going to be using this stuff moving forward. And then, of course, you've got the pure store of value with Bitcoin, which we talked about. Finite supply, decreasing inflation rate. Everybody understands what the network is used for. It's the strongest and longest running blockchain out there, and there's value in it. Year over year, it continues to grow, strengthen, and move forward. So there's real value there. Open finance is another area. So that's interchangeable with DeFi at this point. And again, the idea here is if I want to send Joe cash, money, I need to go through 2 different intermediaries. I need to make sure my bank is signed up. I have an account, wait 2 to 3 days, send it through maybe a process that's a little bit more simple like Venmo, PayPal, Cash App, something like that, but you're still using Cash App, Chase, JP Morgan Chase, and then Joe's bank. So there's 4 different people involved at that point, and they're all taking fees and they're all taking different cuts along the way. And of course, you need to be a US citizen or you need to be a citizen of a country. If I want to participate with somebody in another country, it gets even more complicated. So that DeFi or open finance principle here is that if you've got internet connection, you've got a private wallet, you're able to participate with a gigantic world out there of individuals who are simply wanting to participate in traditional financial tools. And instead of trusting companies, they're trusting blockchain technology.
Correct. And to kind of add on to that, kind of think of it maybe like traditional system is more like a permissioned system, right? Like at the end of the day, the banks can stop a payment from billed to me if they don't like something about the transaction. When you want to send Bitcoin across that permissionless system, there's no party to stop that transaction. That's at the high level, the easiest way to look at that and why there could be benefits.
So again, I mentioned this before, blockchain infrastructure layer, that is my personal favorite area to invest in. We focus a lot of this in our fund, in our research and due diligence, but this is specifically focusing on the infrastructure layer. So a blockchain is the underlying software, and you can think of it as, applications that are built on top of Android or applications that are built using Mac OS. You could think of this as, a foundation by which different applications are built upon. And the interesting part is that you get exposure across the board for projects that are building on top of, say, Solana, say, Ethereum, Avalanche. Many different popular blockchains offer different perks. And when you invest in the underlying asset, again, if you have a very popular application that's built or something that goes really mainstream, the value trickles down to that underlying blockchain. So it's a very unique way of getting almost like an index exposure to different projects. So the last 2 here, of course, is Metaverse and NFTs. This is becoming very, very popular, Joe, especially over the past 12 months. We've heard, NFTs have absolutely exploded. So the celebrities are involved with this now. The community is vibrant. Many people kind of are shrugging this off, but we can say that there is real activity happening here. There's real communities becoming built and involved, and the utility of owning these NFTs is becoming more and more genuine. So you've got projects like Bored Ape, CryptoPunks, you've got Jimmy Fallon, Snoop Dogg, all these different celebrities that are embracing this culture right now. And this is all built on top of blockchain technology. And then, of course, the metaverse, right? So everything inside this metaverse is meant to kind of either replicate the existing world, but also take you into a different universe. So some great examples, right? If anybody's familiar with early video games like The Sims or even World of Warcraft, you're understanding this idea of entering a digital world. And this is the metaverse, but even taking it even further. So we expect to see, companies that are built inside of metaverses, real estate inside of the metaverse, individual projects, companies, and we're seeing the beginning stages of this now with exhibitions, concerts taking place inside. the metaverse. And, we're so early in this area that we believe there's real potential here for even mimicking some of the traditional real estate concepts, Joe. So, inside certain metaverses, there's waterfront property. There's individuals that are buying property next to Snoop Dogg's property inside of the metaverse. And this stuff may sound a little crazy, but the same principles are playing out here as traditional real estate. So it's really interesting to kind of step back and watch the innovation that's happening in these two areas.
And yeah, to add to that, I mean, think like maybe like there's different social platforms right now. Like some people might participate mostly on Facebook, some on Twitter, some on YouTube. Well, same in the metaverse, right? There's probably gonna be many different metaverses that you could enter and participate in across the world, but there's gonna be certain ones that fit your character or what you're looking for. And that's probably where you're gonna spend more of your time interacting with people or doing business meetings. Also, when it comes to NFTs, you know, there's a lot of stuff that floats around the public right now about NFTs and these pictures, but that's probably not even where all the world use and best applications will go in the future, right? I think the certificate of authenticity or the title or verification of ownership data, et cetera, is where the biggest use case is when you think about all the assets and different things that are located across the world. Once that's kind of implemented on chain basically, and there's that digital verification, then you'll be able to easily be able to also get loans and everything right against those assets instantly.
Yeah, 100%. So, Joe, me and you, our team, we've looked at hundreds of projects over the past 4.5 years. It is interesting to sift through them. We've developed some proprietary models to help us kind of find quality over quantity here. Let's talk a little bit about our due diligence process and what are some highlights that you can share with the group here.
All right, awesome. We probably spend, if not days, weeks on certain due diligence, write-ups. We create our own deck. We do some different models internally. So, obviously we're constrained for time here, but at high level, we're gonna hope to give you as much insights as possible and enough to get started. And the best way to do this is to get started on at least picking several different projects and running through these different steps and taking it from there. As Bill mentioned, those different categories, you're probably gonna wanna start is kind of pick a category that you wanna focus on to invest. And then from there, you're gonna wanna look at the projects that are available. And for us, when we're looking at those infrastructure products, we're gonna start with like these due diligence items. And so first, we definitely start with the, what's maybe known as the jockey, right? And that would be the team. So what are some things that we look for in the space? We like the founders to be identifiable. Sometimes there is anonymous founders in the space. We prefer to build a personal relationship with any that we're going to invest in or fund. So we like to be able to see them via Zoom or in person. Also, we like to get to understand their track record and experience and where they're coming from, right? What is it about their past that's going to give us an idea that they'll be able to execute their vision? Last, in this space, it's moving at a very fast pace. And, with the changes and everything, you need a founder that is maybe not so narrow-minded, but has the ability to be able to pivot, right? So if things are changing in the market, that they can pivot with whatever that may be, regulations or just, finding product market fit. And that's, important to us. Again, touching base with the interviews, right? These are interviews we did a couple years ago. We try to consistently do interviews with projects directly. No different than if you want to invest with a fund or a syndicator or whatever that may be. You want to have an understanding of what that manager is or that founder. What's their vision? What are they currently executing? What information can you get out of them that you just can't find online by reading different sources? Next, you could go to what's known as like a block explorer. And this is going to give you insights about the token metrics on a certain project, right? So on the top left here, we have the token ribbon. It gives you an idea of what the price is at that time, what's known as the fully diluted market cap, the number of holders, which is basically the wallet addresses that you see on the right. And so then you can see on the right, you have the wallet address. So each wallet address represents, a different holder. one holder can have, or one person can have multiple wallets. Then you see the quantity of tokens that wallet holds. This gives you insights into maybe how concentrated certain holdings might be in a wallet, right? You might not want certain whale wallets to hold majority of those tokens because at any time they can release them to the public. On the bottom, you have the transaction history, the method, the time in which it occurred, and then the wallet it came from, the wallet went to, and the number of tokens that transferred. So when it comes to fundamentals, right, a few sites that we have here is CoinGecko, CoinMarketCap, Token Terminal, and Token Metrics. So you could go to these sites. Best thing to do is go to one of these two sites, probably CoinMarketCap, CoinGecko. On the top left, you'll notice you can look at one token, this Bitcoin example, and it's going to give you that same similar information. This is probably a great starting point. So once you identified the area you want to invest in, you're going to come over here, you're going to filter down by category to the area that you want to participate in, whether it's gaming, metaverse, blockchains, or DeFi projects. And then you'll get a list, and then you go into details on each one. Things that you want to look for here is like the price, the different market caps, which maybe the free float. So a lot of projects might have what's known as like a high fully diluted market cap, where they have the ability to sell a lot of tokens into the marketplace, which could hold the price down over time. So these are things that you can find on these sites. As I mentioned, the wallet distribution, understanding where the concentration of tokens are in whose wallets. On the bottom left, we have an example from Token Terminal. This is going to give you the price of sales or price to earnings, right? So some protocols basically have a rev share or a portion of every transaction that could go back to the token holders, and you could get that information here, similar to what you might do in the public markets. Anything else you want to comment on there, Bill?
Yeah, I think you nailed it. Look, there's a lot of information out there. What we encourage everybody to do is just explore. Cryptocurrency is built on transparency for the most part, and there's a lot of information, even more so than investing in public companies. So explore them, get creative, get excited. That's how you jump in, you get involved. So definitely encourage a lot of due diligence on your own, and take time to just explore the industry. These are some great resources.
Yeah, and so far the history of this space is have some type of cycles, right? And so this data does change pretty frequently. So when we're in more of a bull market, the charts look really great. And when we're in a consolidation phase, it might not look so great. So just be a smart investor and understand that, just price to sales or price to earnings might be very high in a bull market, but when it slows down, it's going to be lower. And so, you want to take the time to be a smart investor, but also deploy in the right times. I mean, timing in this market does have a big impact on overall returns. One of the biggest things we think is very important, one of the most important things, right, is understanding where the developers are and the community behind a project, right? It's typically been known that the more developers a project has, or the more developers, or the more developers a project is attracting, the better that project's going to do in the future. So there's over 18,000 current active developers. And the things you want to start looking at is how often are they contributing to code, and what is being accomplished, and are they hitting the roadmap goals, right? Also, what are the incentives available for developers to come to that project and build? What is the reserves or treasury that project may have to allocate for these developers? These are, probably one of the most important things to look at. Also, community, as I mentioned, when it comes to that sentiment, going through the Twitter and Discord accounts, is very important. Understanding, are they talking more about price pump? Are they talking more about development? Are they saying GM good morning? However it may be, depending on what's happening in crypto space. But overall, you just want to know, you could get a sense after you go through a lot of Discord accounts that what is happening, what sentiment is, and if that project's going to last a longer time. So we definitely would advise there, and starting, combing through different Twitter accounts of these projects, going into their Discord accounts, participating, understanding what everybody's saying, and through this, you also can build these relationships with other people in that space. Next, you could go to old Google, right? Check out what's happening with web traffic, where it's coming from, what jurisdictions, and how many people are searching for that project. And last, how frequent is that project updating the community with what's happening? So all projects, typically on the social channels will outline what's happening, what they're doing on the roadmap, and what is being completed. So when it comes to funding, all projects need funding in this space, right? You need funding in order to develop, especially when it comes to tech and software. So one spot you might go to get an understanding is Crunchbase. And on the bottom left, we have Polygon that recently had a funding round of 450 million. For most of the startups all in blockchain, you're going to go to Dub Metrics, and they're kind of tracking most of all the new startups that are getting funding. So these are two great resources where you get an idea of how much a project has raised, so you can kind of forecast what their treasury may look like to pay out these expenses for those developers. Or a lot of projects start doing community or developer grants where they'll fund new projects or applications to be built on their blockchain. Next, back to Discord and Twitter accounts. As you can see here, Polygon is notifying everyone through Twitter and Discord of just what's happening, events that are occurring, funding rounds. As you can see on top right, they running a $200 million ecosystem fund, right? So these projects will start incubating projects, to build on their network. So it's a great way to get data on these 4 sites.
This is just last note there, like Twitter and social media is inherently built into crypto culture. So whereas you wouldn't necessarily go to look at PE ratios or earnings on social media for existing traditional markets, crypto and social media, and more specifically Twitter, is really intertwined, and Twitter is kind of the go-to communication for crypto, as well as Discord. So there's a bit of a learning curve from those traditional guys coming over to experience cryptocurrency markets. And crypto, and more specifically Twitter, is really looked at as the beacon by which companies communicate. So it's a little bit of a shake-up from traditional finance. You don't go to Bloomberg necessarily to look for updates on crypto companies.
Yeah, you have to go to the multiple different sources that are out there and then kind of form your own opinion or try to touch base with the team directly. So on number 3 here, we have what's known as the white paper. Almost all projects display a white paper on their website, and the overall here is that they're basically writing out their business plan, how they're going to execute that, and also how they're going to allocate their tokens, right? Are the tokens going to be allocated to marketing, treasury, to the team, developers, etc. And that's great, another resource. So once you have gone through some due diligence on some certain projects, then you filtered down maybe 5 or 10. I would go to each individual website, also look for the white paper and read through that, and that will really be a great way to get started. Last, we have the Block Explorer. Again, you go to the Block Explorer, do research on a certain project, understand how the tokens are distributed. Another tool here is that there's certain platforms that allow you to track certain whales and what transactions they're doing, and that can help you just learn and understand how these guys are trading and how they're participating in these different projects. So when it comes to beyond just investing in tokens, right, as I mentioned, there's a lot of different people that want to participate in some type of just fixed rate return in the market, and these players have been bringing in billions of dollars over the last few years. And so Bill's going to break down a few ways if you want to get yield and how you can do that.
Yeah, so 3 main ways here, and we'll go into detail shortly, but DeFi is obviously the number 1. So no red tape, no KYC. Generally speaking, you need internet connection and you need an Ethereum wallet. So you're able to connect your wallet, deploy capital, earn yield, also be able to provide capital for leverage trading for other people, and generate a consistent fixed rate for yourself. So Aave protocol and Compound are some of the oldest and most reputable DeFi platforms. In general, they over collateralize, and there's a number of safety features that they have in place to be able to consistently and responsibly create these yield. If you're looking for a kind of simpler way to get exposure to DeFi, you can use a CeFi protocol. So Celsius Network, BlockFi, Nexo, these are all examples of companies that have built out real networks and buckets of capital where they're able to generate consistent yield by a number of different mechanisms. So lending, borrowing, arbitrage plays, and essentially they're all kind of offering 7% on that stable coin for USDC. So that's basically the interest rate right now moving forward. And then you can also get returns on Bitcoin, Ethereum, and a number of other assets out there as well. So again, with CeFi, you're trusting a company that's leveraging a number of different ways to generate yield, and DeFi is included in that. And last but not least, a fund, right? So when you become an LP in a fund, more specifically a fixed rate fund, you're able to take advantage of fixed rates that are locked, changing rates, and you're able to kind of park your money in a trusted place with a trusted custodian and kind of passively collect that fixed rate. So these are three ways, especially in crypto, where you can consistently generate that 7 to 12% depending on where you're going. And get exposure to this industry while providing basic monthly checks that are coming in. So three different ways there, and all have their own unique different ups and downs and ways that they can when users can take advantage of. So why choose a fund for yield? We get this question a lot. Four main reasons, right? We could go on and on this, but if you've ever been an LP in a fund, there's an understanding that there's industry knowledge, right? So when you deploy capital as an LP in a fund, you're developing a relationship and you're understanding that the people behind that fund are experts in the industry, right? They're full time in this industry. There's no passive exposure. These are people that are dialed in, understand the markets, understand the cycles that are associated with it, and they really are able to provide that expert level of context and clarity, especially in these bear markets that we may be facing right now. Community engagement for LPs, right? So Joe mentioned it earlier, there's no industry like the crypto industry. And when you're an LP in a fund, there's a lot more perks that come along with that, right? So there's events, there's parties, there's access to a number of different things, but really, Joe, and we can speak to this, it's network, right? When you're an LP in a fund in crypto, you are part of a global family. And I can't stress that enough. It's a way to really expand your network. There's side deals that are often discussed. There's allocations to other projects and companies out there, and it's just a great way to connect with people that are like-minded and looking to explore this industry at a different level. Diversified portfolio and volatility mitigation, right? So if you're a passive investor or you're looking for yield in a different way, you may have your entire bucket dedicated to a certain project. And we've seen, especially in certain industries over the past 6 weeks or so, that has not been a strategy that's played out. So when you work with a fund, there's a responsibility level of the fund to make sure their portfolio is diversified appropriately and you're able to increase performance, right? So many funds look to beat Bitcoin's performance in terms of as a benchmark, similar to how many hedge funds look to beat the S&P. There's similar ideas and concepts that float in the performance-based funds. However, with fixed rate, you're able to really diversify and make sure that you're able to get exposure from a wide variety of different areas inside of crypto. And then, look, not everybody is 100% obsessed with crypto like Joe and I. If you are an investor and you're looking for passive exposure, you can't beat becoming an LP in a fund. It's a way to get the best possible exposure across the board, mitigate risk, become part of a community, and deal with experts, but not dedicate your entire life to it. Be a passive investor through a fund, sit back, relax, join the calls here and there, Become involved when you want. You don't have to stand in front of your keyboard all the time and make your own trades and become wildly involved. So it's a great way and probably the best way to get that passive exposure. So Joe said it earlier, not everybody can be an expert in everything. So do what you're good at and let the industry experts take the rest and handle that from a GP side. And then, let's cycle this back to where we are right now, right? We're talking about crypto tax benefits. We're talking about tax advantage vehicles here. Joe, why don't you bring us up to speed on where we are in terms of the IRS and moving forward with federal proposals on taxation on crypto?
Yeah, I mean, so for the most part, when you're participating in the space, you're mostly participating either into like a yield product where you're going to get an interest statement, right? Or you're buying and selling crypto. And currently the IRS treats crypto as property for federal tax purposes. And therefore the general tax principles are applicable to property transactions. And therefore, within an IRA, this gives you the ability to have that tax treatment. And so this is why we love this space. And, we love using the IRA again to reiterate, when you're earning interest income or you're buying and selling different crypto, you're going to have that capital gain treatment, and therefore it's going to be tax-free within your account. Clay already kind of summarized this at the beginning, so I'll just go very brief. As he mentioned, there's multiple different ways for you to participate with your existing IRA account, and that is, you can set up that LLC, and you have the ability to invest directly into startups. Maybe you want to set up something like Peter Thiel, where you're investing in all these different startups and hopefully you become that billionaire with your IRA. You can set up those accounts at exchanges. Maybe you just want to use your self-directed IRA without the LLC or anything else, and you can invest directly in these private placements or these funds. Last, you might be able to connect directly to an exchange like ErisX or another one, depending on what access you have. But there's multiple ways to participate, and I think everyone should definitely at least get started. When you first get started, you at least like us, right? You make that first little investment, make it small, it gets you to pay attention, and it gets you to start doing your research. So just to kind of conclude here, and then we'll open up for that Q&A, is that IRAs as a U.S. resident right now, I believe, are one of the best tax vehicles for crypto investing. And also the reports in the space show the exponential adoption curve of this technology through the end of the decade. And ultimately, this is going to allow you to participate, whether you're investing in these yield funds that these funds can actually pay these higher returns than banks and other funds, or you want to invest in tokens directly, or maybe you want to invest in startups or equity in companies. But based on all the reports, we're showing exponential growth here through the end of the year. And we will also, if anyone would like to, we'd like everyone to sign up to our weekly digital asset newsletter. As you see, here's an example where it goes out every week, an article on what's happening. We also provide what podcasts we did directly with these projects. So you get insights. We kind of have a question format that we go through. You can understand what's going on. Please sign up there. If you want to inquire directly for more information, you could go to robertventures.com, fill out the form, book a call if you're accredited, and we'd love to speak with you. So Bill, let's open up for Q&A, right?
Absolutely. Looking forward to this. My favorite part.
Okay, so everybody out there, please do feel free to go ahead and type your questions into the questions box. We're happy to answer them. We probably will truncate this a little bit because we took a little bit more time than we do sometimes, but let's get to a couple of questions. I think I went ahead and put our contact information up there, because one thing I do want you to realize is that Bill, Joe, and I are all happy to be an ongoing resource for you. So if your questions don't get answered on air here, we will certainly get those answers to you, number one. But also your questions might occur to you later. So don't feel like you've completely missed your opportunity. We're happy to be an ongoing resource in that regard. Okay, so let's talk about some of these. So the first one is it's a question about what's the benefit or disadvantages of having an LLC as your vehicle for investing in cryptocurrency. And I'll take give my take on it, and then if you guys want to chime in, that's great. I would say that the benefit of the LLC as a subset of your IRA that then goes out and invests in cryptocurrency in whatever form, or other assets for that matter, is its agility. LLCs are easier for some entities to understand, and to understand how they need to do their perform their due diligence on the investor and that kind of thing. IRAs are really they're a little bit tricky because they do have a custodian as part of the equation. So there's an encumbrance to that really is a little bit different than LLCs. And by virtue of that dynamic, LLCs it's going to be easier for an LLC to go out to some exchanges than it will be for you to go out as an LLC, as just an IRA and establish an account, right? So it's just easier for you to establish accounts in certain exchanges, on certain platforms and things like that. Also, when you have an LLC as a subset of your IRA, typically you've set it up as what's called checkbook control in our industry. You are also the manager of that LLC, which means that you would probably get to choose storage methods and things like that. Whereas if your IRA is going directly from the custodian to the exchange, your storage methods may be a little bit more limited and things like that. So I would say your ability to invest in different ways and in different places is enhanced with having the LLC. The disadvantage is that it takes longer to set up, and there are some additional fees in terms of keeping the LLC in good standing with the state and you doing the bookkeeping for it and things like that. None of which are incredibly onerous. It's not like it's something that should never be done, but do understand there's a little bit more time commitment in that scenario.
Yeah, I mean, just to add on to that a little bit, is that my experience is that when you use just your IRA account directly, you usually also have that custodian looking after what you're doing a little bit more, like based on the transactions, because they have to approve those monies or new direction of investment, right? So if you're using an LLC, depending on how broad you're going or how many different things you're investing in, I definitely always would recommend, having some type of counsel just overlooking how you're managing and doing those transactions. As we kind of also move into these newer spaces or sectors, when you start having these hardware wallets and different things are not always very clear or not written into the code what is exactly allowed. So it's always good to definitely, check with counsel.
Yep. So I'm gonna paraphrase a question that's in the box, just because I'm kind of interested in the more general response. And then there's also one political one. Are you guys open to political questions? Not domestic.
Oh, you can ask whatever. It doesn't mean we answer, right?
So we'll ask these two questions, and then I think we're going to wrap it up after that. So we respect everybody's time, but if you do have questions, again, please do feel free to type them in. We will get you the answers. It's just we may not answer them here on the webinar. So the first question is generally speaking about risk. Why? Because of the volatility that people see on cryptocurrencies, and because there are other alternatives that are competitors for your money or for your investment dollars, why would somebody choose to risk it on cryptocurrency in one of these forms?
That's a good question. So I'll put a couple insights here, and then Bill can add on. Well, let's say you're just going out after the token aspect, right? At the highest level, without going too long, is that these are networks, right? And as more people join these networks, the value accrues, right, within that underlying token and project. So if you think back to Amazon, Facebook, or any of these tech companies, right, at baseline, the more people that join the platform, kind of the more that network expands in value, right? And so if you go back 10 years ago, 20 years ago, I mean, even in the last 3 to 6 months, tech companies have had 60 to 80% drawdowns, right? So at the beginning of these networks, if you go back in time, you're going to see that all these same companies had similar type drawdowns as you see in the crypto market. So it's not like it's just appearing in the crypto market. It also, appears at these different new technologies come into the industry. So that's one point. The other is, there's 10,000 tokens, right? So you definitely can get distracted. We go to where, as we mentioned, where the most developers are, the most users, where the most robust network is. And ultimately, that's where we would place our positions or our investments and kind of monitor that on an ongoing basis. Anything to add to that, Bill?
Yeah, I think when you're investing in cryptocurrencies, you're choosing to invest in a asset class that is in many ways disconnected from the current financial system. And if you are betting on the fact that fiat currencies right now are not doing well, and they will most likely continue to not do well moving forward, unless fiscal policy changes, you want to opt out, right? So the idea here is you don't want to bet the farm on crypto. You don't want to over leverage yourself, but you want to diversify and you want to have exposure to this asset class, right? And sure, you can generate fixed rate income elsewhere, but we believe that moving forward, you want to have diversification into this asset class, in this industry, because we believe it's the future. We believe that 5, 10, maybe even, who knows, maybe 3 years from now, people are going to be using digital assets and currencies outside of the US dollar. And you're betting right now on innovation. Whereas if you're looking to invest in many of the current bonds, everything right now, you're investing in the past. So that's one way of looking at it. And there's risk across all assets. Like Joe mentioned, take a look at Snapchat, take a look at Tesla, and even Netflix right now. Like, things are not looking great. So we're betting on the future of finance, and we're betting on the future of this technology. So that's why we're passionate about this, and we believe that there's real value moving forward.
Yeah, and just to add to that real quick is that there's obviously multiple ways to participate. There's a lot of different ways, but you have the tokens. You'll also have the equity of the companies, right? So there's a lot of companies that are being built out where you could actually, invest as an equity owner, similar to venture capital, right? And a lot of these companies will also go public. So, different funds have different strategies. Typically, a high risk performance based one is going to take positions mostly on high risk tokens, right? When you go into a yield fund, that fund is typically going to have different exposure across maybe a portion of tokens, a portion of DeFi, basically yield farming, and then might have equity in companies that they own 100% or a minority stake, but they have a broad portfolio that diversifies that risk. So it depends on also your risk appetite of what you're looking to enter.
All right. Okay. Thank you for that answer. I realize it was a pretty broad question. Okay, last one, and then we'll wrap up for today. But again, anybody on the broadcast, please feel free to type in questions. We'll get you answers. Is it correct that China already banned cryptocurrencies entirely, and that India and Pakistan are poised to do the same? And if so, why are they doing that, and what's the impact?
I can comment here. So, since I have been involved in crypto 2013 and investing and really purchasing since 2015, I have heard China banning Bitcoin about 9 times since then. So the reality is, right now, what they have done is they have banned Bitcoin mining in its most pure form. So that is true. And what happened was there was an exodus of the hash rate and the mining companies to other parts of the globe. So at one point, the majority of the Bitcoin mining for the network was taking place in China. So what was supposed to be a decentralized network was actually concentrated in one of the most, in many ways, non-free nations out there. So this move was actually great for the Bitcoin network. So yeah, we see this happen time and time again. We've seen it happen, over the past 2 years with Pakistan many times. Oh, they've decided to ban cryptocurrency and Bitcoin, make it illegal to own, and then they revert going back because it's very challenging to enforce this. And in more developed countries, they understand this. And the United States is probably setting the tone in taking a lot of non-action here, because they understand that if you're siding with crypto, you're siding with innovation, and we do not want to stifle innovation in the US. But circling back to the question here, yeah, China often bans Bitcoin. They change their mind, they go back As of this point, they have banned mining of Bitcoin more specifically and cryptocurrency. So a lot of exchanges shut down. There's a lot of traffic and a lot of volume that was happening in China that has moved elsewhere. And we do see that with Pakistan, a number of the other countries out there. But in my experience, this comes and goes as the flavors change with different regimes and different political appetites for the technology. So not something that is on our radar that we're really paying too much attention to.
Yeah, I mean, similar, like everyone's familiar probably with real estate, right? And so during the C-19, obviously, government even here put some rent moratoriums in different areas, right? Does that mean from an overall picture and long-term vision, do you stop investing in real estate? No. Everyone still needs housing, right? And the way we're going is a digital economy and this borderless infrastructure. So being in in this space, one thing I've definitely learned, and I learned early on from attending a lot of different conferences, and this probably goes with maybe not everyone's opinion, but usually what you hear in the news is mostly just noise, right?
Yeah.
So try not to listen to the news and political things so much, and just be focused on what you're investing in and kind of pay attention there. And that's how I look at things.
Well, gentlemen, thank you so much for your time, and everybody, thank you for tuning in. Joe and Bill, again, I really appreciate you putting together your thoughts and giving us kind of a package and letting us know what's going on in that environment, giving us a map for that. So appreciate your time today.
Thank you very much, Clay, and thank you everybody for joining. I appreciate it.
Yeah, appreciate it. Hope you guys got some value out of this, and if we can help answer any other questions, don't be a stranger. Feel free to reach out directly.
Yep, for everybody who's either tuning in now or listening to the recording, please do feel free to use any of the three of us as a resource. I'm happy to provide some information for you, and we will see you on the next educational webinar. Thanks a lot for joining us. Have a great day.